It's good to see you today, Nick. Let's talk a little bit about consumer staples. On a day like today, when you've seen the broader markets plummet, it probably seems like a safe haven bet for a lot of investors.
Yeah, absolutely. I mean, but let's not forget that right now consumer staples are trading at almost all-time highs relative to the S&P 500 in terms of valuation. So these stocks are very, very expensive, but there's no question that when the market becomes risk averse, this sector tends to benefit, which is why you're seeing it outperform so much on a relative basis.
What's the difference between a consumer staple and a consumer discretionary stock? Because I have to confess that I'm sometimes perplexed by it. I mean, I see Hershey on the list. I see Coke on the list. I see Pepsi on the list. Those seem to me to be sort of discretionary purchases some of the time as opposed to staples. Where do you draw the distinction, draw the line?
Yeah, I mean, Tyler, the way you have to think about it is everyday groceries that you might put in your basket, right? And so one could argue chocolate is discretionary for some people, certainly not for me. But you know, the reason why it gets grouped in with staples is because it has much more of a stable buying behavioral pattern versus some other categories that may not be as frequent, like buying a washing machine or a refrigerator or a television, right? So yeah. I think that's really the delineating line between.
Yeah, so you look at a General Mills, people are going to keep buying cereal. Constellation, they're going to keep buying beer. P&G, they're going to keep buying diapers or detergent.
Yeah, that's correct. And look, every company has its own nuance, which is why stock picking becomes so important in an environment like this. So you have to really get into the nitty gritty on category exposure, private label exposures, geographic exposures, pricing power, innovation pipeline. So there's a whole host of things that have to go into this algorithm that you have to really think about when picking these stocks.
Okay, so we're going to ask you then, Nick, to get into the nitty gritty. Then in this group, who do you like? Who do you think has staying power? Who do you think will outperform the market even if we get past this initial fear phase?
Yeah, so I think you have to understand, I guess, and you guys were just talking about ETFs and passive investing, you know, themes and thematic investing is becoming very pervasive right now, right? I mean, it's really what's cutting across most industries. And so when you think about it within that landscape, Europe is going to be a problem. Currency is going to be a problem, right? Not having pricing power is going to be a problem still, even in 2023. So the names that we really like are very US-centric in nature that have pricing power and have some kind of company-specific nuance that I think will lead to some upside in terms of earnings and revenue as we go forward the next 12 months. So those three names that we think about, Constellation Brands, Keurig Dr Pepper, and Hershey, are three names that we would kind of categorize in that grouping.